Hey, this is Chris, and in this video I'm going to be talking about how to buy Bitcoin. Now, Bitcoin is a very exciting investment idea for a lot of people. I actually started following Bitcoin back in 2013 when it spiked my attention because it went from $100 to $1,000 in a year and then fell all the way back down to about $150. So that's what initially caused me to be curious. And since then I've really learned a lot more about this technology that's gaining greater interest and adoption around the world as a network of trust, as well as a store of value. Now, if you are interested in investing in Bitcoin, something you need to be aware of is that it's still a very speculative investment. It's still very risky and has high volatility, which means it tends to go up and down a lot. In fact, it's gone down by over 85% several times in its life, despite having phenomenal growth. And so if you're thinking of buying it, you need to have an investment strategy that recognizes this. And I would have 6 different tips for anyone looking to invest in Bitcoin to make sure that you're actually able to enjoy the long-term gains if you're right and Bitcoin ends up being a successful investment, while also protecting your downside if that doesn't happen to be the case. So my first tip would be don't invest in Bitcoin if you're not in the financial position to do so. So if you have debts, if you have credit card debts, or if you don't have a bit of a savings buffer, investing just generally isn't right for you because you need to be paying off your high interest debts first and building up some savings. Certainly investing in a speculative asset isn't right for you, and so I wouldn't be touching Bitcoin until you at least have some savings built up and don't have any credit card debts or personal loans. The second tip I've have is, regardless of how much money you have, you should always limit your exposure to risky or speculative assets in your overall portfolio. I like to think that your portfolio should be something like 80% exposed to diversified assets like shares and bonds, and then you can leave a part of your portfolio for speculative punting, but ultimately you should keep the speculative part of your portfolio quite small. So if it doesn't work out, it doesn't cause large financial harm and actually impact your life in a negative way. And related to this, I would say that it's always tempting to buy speculative investments like Bitcoin when everyone's talking about it. I saw this in 2017 when Bitcoin had an enormous run from $1,000 to almost $20,000 in 1 year, and the masses were all jumping into this just at the wrong time and putting all of their money in at the point that they shouldn't have been. A way to stop this from happening is by dollar cost averaging. This means not investing everything at once, but actually working out what you want to invest in Bitcoin, separating it into 10 or 20 different parcels, and then buying it gradually over time. What this will do is help to avoid buying it all at the point that everyone else is, that ultimately may be too expensive, and give you the chance to buy it a lot cheaper when no one's thinking about it. Those who dollar cost averaged into Bitcoin over 2017 and 18 not only would have bought at the high price of $20,000, but also had the opportunity to buy at lower prices like $4,000, which would have now been a great buy given it's trading much higher than that. My next tip would be, unlike other investments like shares, which are traded on an exchange and you have a level of safety and security, Bitcoin does lead to you having what's known as counterparty risks. So if you buy Bitcoin through an exchange or a website, you basically are exposed to the risk of that website or that exchange going bankrupt. So this is something you just need to be aware of, and you need to consider your risk. One way this can be mitigated with Bitcoin or other cryptocurrencies is by actually owning them on a hard wallet, which basically means taking them off the grid. But this itself comes with its own set of risks that you need to research and be aware of. The next tip I've have is Rebalance. So if you're lucky enough to buy any speculative investment that does really well, what you'll notice is that it becomes a larger and a larger portion of your overall portfolio. So using Bitcoin in 2017 as an example, if you bought in January when it was $1,000 and put 2% of your portfolio into it, by the end of the year, when it was close to $20,000, it would have been something like 35% of your portfolio, a really, really large part of your portfolio. Now, even if you're even more confident that Bitcoin is the right investment and it's going to keep on going up, the right thing to do still from a risk management perspective is to harvest some of those profits, to take some off the table and invest it into less risky investments. And actually doing that at the end of 2017 would have helped to lock in some profits and ultimately give you the chance to buy back lower. And when Bitcoin fell by 85% in 2018, you could have been buying back rather than sitting on your hands worried that you'd lost so much from the highs. So always give yourself the chance to rebalance if you can, because it will put you in a much more positive mental state and allow you to buy back lower if you get the chance. And you'll also minimize regret because even if it keeps on going up, you'll still feel happy that you own some. And the last tip I'd have with any speculative investment, and I'd say this is the most important if you want to enjoy long-term success, is just ignore the short-term price moves. The price is going to go up one week, it's going to go down the next week. If you're obsessing over it, checking your phone, checking the price online, it's almost inevitable that you're going to sell and you're going to sell too early. And so what I would do is put it in the bottom drawer, forget you even owned it, and then dig it up 6 or 12 months later to have a look at how it's going. Definitely don't watch it every day because it's going to lead to bad investment decisions. Now, if you have any other ideas or tips on how to invest in Bitcoin in a sensible way to enjoy the long-term benefits, please comment below. And if you like videos like this, please hit the subscribe button as well. Thanks.